All right, welcome to the We Live It podcast here, and myself, co-host Ty DeCordova with Casey Mabry. We're going to try a little something new here, do a kind of a weekly market update or a bi-weekly market update, just kind of fill this out and see how you guys and gals kind of like it. And if you want to submit some comments in the different platforms and some questions and something y'all would like to see us cover, we would love to go over stuff like that and just see how this takes off. We're kind of excited about doing this. We've been talking about doing it for quite a while now. For several years, actually. Casey and myself have been talking about doing it. So I guess we'll kind of start talking about your Denver trip. Let's talk about the kids real quick. Y'all had a very good Denver trip. Your reserve.
Reserve breed champion there in the Chester White. So that was pretty good to do that. We had I thought we had one that was pretty good, and then kind of chips fell in our favor for that for sure. So we were able to go up there, and then this weather looked like it was going to kind of throw everybody for a loop. And that show was on Tuesday, I think. When did you guys show, Ty?
Y'all showed Tuesday. We showed Wednesday. Yeah, Wednesday. Yeah. So.
And then it looked like the weather was going to start getting pretty bad. Friday, Saturday down here in Texas, and so I left Deidre and Avery up there, brought the other two girls, and we took off and headed home to kind of lock everything down because it got pretty cold here.
Yeah, I was told today that if I was gonna not be home for one of these winter storms to move in, that I dang well better have all of our stuff at the barn fixed and ready for the winterize, because I didn't get home till Sunday night, and oh yeah, I had pipes busted. I got all kinds of stuff hanging out of the ceilings, and she just looks at me like it's my fault, but I'll take that. So
yeah, I'll tell you what, we got down to I think 9 degrees or something one night, but anything below 20 in Texas. I remember whenever I was in college and I went to Beamer, Nebraska on a meat judging trip, and I looked up and I saw the temperature on the sign at the bank, and it said it was like 20 degrees, and that's the coldest I think I'd ever seen it in my life up until that point. But you get that in North Texas, it's definitely crippling. Kids that haven't been to school all week. We had, I think we probably got 3 or 4 inches of snow and ice. Right before that, we had some rain, so it definitely kind of slowed. It slowed everything to a standstill around here. But we lived in Wyoming for 5 or 6 years, and it'd get down to 15 or 20 below, and you wouldn't have to do anything. Up here, you got to everybody runs to Home Depot like the world's about to end, and so there's a lot of people out there, getting faucet covers and all kinds of stuff, trying to make sure that their house doesn't have a problem. But we luckily got through there. We haven't had an issue. We've got everything set up as far as for the livestock concerned.
Yeah.
Everything was good there.
I drove up there yesterday, and we cut through Peachtree and back up through there, and them roads were still kind of bad. And we went all the way up to Oklahoma, and we come back last night late, and it done froze back again, and it was pretty ouchy in some spots. So that being said, we've as far as the market goes this week down this way, Oklahoma and Texas and the South down here, most auction barns and markets have been closed for the last week because of the storms. And I think they even, like Woodward and them, even closed today just because they can't get some of them. And some of them rural communities, they still can't get out of some of that spots. So we haven't seen a whole lot of cash trade this week, which has kind of affected what you on your side of the deal, Casey. So kind of going to explanation on how us not seeing a cash trade in the South affects the index and all that stuff.
Yeah, so CME Feeder Index is an average of the last 7 days, and it takes into account the sale barns in all of those areas. And so obviously the northern markets are bringing a premium, and they historically do bring a premium because of cattle type and different things like that. So normally you get kind of a national average. So what you're going to see over the next couple of days is the index is going to drastically move higher. What kind of throws a kink in that is the way that the CME futures market settles. So the last day for the CME feeder contract for January, if it was in the middle of the month, it probably wouldn't be that big of a deal. But it's January 29th today. Friday's the last day of the month. So you'll see the index post higher, and just out of sheer lack of numbers in the South, you're going to see that CME feeder index post higher. So anybody that's short the January contract going into expiration, it settles to the index, which is going to be what tomorrow's prices are going to be, basically off today and today and tomorrow. And so I've seen some of the preliminary numbers there. CME Feeder Cattle Index right now sitting like I think at 367 or somewhere in that neighborhood, neck of the woods. It's going to be drastically higher, so it'll be posting up there around 370, 371. I'm guessing by the time we get to the settle. So it'll be interesting to see how that plays out. Coming right out of the month, going into the first part of February. The next contract, obviously, that we've got is the March contract, and it's sitting at 365.12, and it looks like it's a steep discount, but it's pretty equivalent to what the market has been. It's pretty flat. So just out of sheer mathematical calculations, you're going to take that market higher just because you're going to have basically zeros for the southern market. You're going to have big numbers for the northern market, and just from a calculation standpoint, it's going to post it higher. So, like I said, it'll be interesting to see how that plays out over the next couple of days and over the next week or so.
Yeah. Good deal. Cattle on feed report come out last Friday. Kind of what did that do to us?
Yeah, I'll post this up on the screen here real quick. If I can get to it. So cattle on feed report came out last week, and it was pretty neutral, is what I'd say. So a lot of people try to interpret what the on feed report is gonna say. Um, and they try to interpret it whether it's bullish or bearish based on what the number actually says. But what you have to wrap your mind around is there's tons of analysts that come out with what that data is going to look like. And so here, I'm going to pull this thing up here. I'm struggling with our technology here, Ty.
Don't ask me how to do it. There you go.
That kind of looks wicked, doesn't it? So here's what the on feed numbers came out like. So it came out at the cattle on feed at 96.8%. So I mean, you're automatically going to go, man, we're down 3.2% from where we were a year ago. But what you got to think about is what the average trade guess was. The average trade guess was 96.8. So the analysts all kind of pegged that. The range was 96 to 97.6. So just right dead on with what most people were expecting. And why that matters to the futures market is that's what the market was anticipating. And so the people that wanted to get bullish or wanted to get bearish, whatever that was, were on both sides of it. So they're not going to really change their position based on that. So what did come in different, placements come in at 94.6. It was a little bit higher than what most people's guesses were. And then the marketing number came in, that's the kill, came in at 101.8, which was a shade higher than what the estimates were. So placements were a miss to the top side. Marketings were also a miss. So we killed more, but we placed more. And so on feed number comes in basically what most people's expectations were. So it's still showing that we got relatively tight supplies, and we're continuing to do that. The one thing that we got to remind ourselves of is during this month, this has been the month of December, we got to remind ourselves of what was going on then. At the end of November, Tyson made an announcement that they were going to close the Lexington plant, and that took the market lower. And so cattle prices had kind of plunged artificially on that news. It gave the packer some artificial margin for that time period. And then the packer ramped kills back up. And then obviously what he did whenever he ramped kills back up is he drove the market price of cattle higher through the month of December and in the first part of January. And so that's kind of where we sit today on that market rally. So those guys, the market's very sensitive to slaughter right now. And so that incremental kill that they added during that time period. So if you look at the chart on the bottom left-hand side of the screen, the red dot, that's where we're sitting here with just a little bit over 11.4 million head of cattle. So we got, as of January 1, 2026, we're sitting with 11.45 million head of cattle on feed. When you look at that, we've got a big difference between the northern supplies and the southern supplies. So we're sitting there, like if you look at Nebraska, sitting there with 2.6 million head of cattle on feed, that's 102% of a year ago. You got Iowa sitting with 105% of a year ago. You got Kansas sitting basically where they had the same numbers as they got a year ago. However, when you look at Texas, Texas is down 9%. So if you're sitting in Texas and you're looking out your backyard, you're seeing lots of empty pens. You're seeing lots of open pens out there. If you're sitting in the north, man, you're probably saying, hey, there's a lot of cattle up here. So a big divide between those two regions, definitely. But when you average the whole thing out, 3% less cattle than we had a year ago.
Yeah. And, I would reference everybody back to the conversation we had. We released, I think last week, the podcast with Randy Block. That was really, really informative from him on what it looks like, the outlook look like this year and stuff. So that would be a really good one to watch. And if you wanted some more insight of the future market. So, um, Casey,
Yep.
appreciate you. Anything else you want to kind of cover on the market wise? We kind of want to keep these
Yeah,
things short.
markets.
We don't want to bore you guys out there, but we do want you to send in comments and ask questions if you want us to talk about much more though. So
Yeah, markets have been relatively choppy. I mean, if you're looking at some of the outside factors, we've got lots of things going on, right? Our administration is really driving lots of behavior differences, and so you're starting to see money flow and move into different things. So if you're watching the metals market like gold and silver, those things are going parabolic. Lots of people are talking about currency devaluation and things like that. How that impacts the commodities markets, we're definitely seeing some impact there. Grains have been soft. And for me, that's something that we got to really pay attention to. If you're a guy that utilizes grains, which most of us are for feed needs, this is about as cheap as you're going to be able to buy corn or have been able to buy corn over the last 4 or 5 years. They continue to find acres out there. They continue to find more production on the grain side of things. So we've got a historically wide spread between grains and cattle. So cattle have been the beneficiary of that. Obviously, feeder cattle have been that way as well. And so the markets have been really sensitive to that. As far as cattle go, we've been up one day and down the next, and so we've
yeah,
got a really, really kind of choppy thing. A buck and a half anymore. We talked about that with Randy. That a buck and a half seems like a lot of money, but really, and from a percentage standpoint, it's really not that big of a move. So every day it seems like I have to go. A customer will call and say, "Hey, why are we moving a buck and a half?" And that's almost like what 30 to 40 cents used to be.
yeah, yeah.
Feeder cattle remained extremely strong, like we touched on there a minute ago. Once we get the weather out of the way, and it looks like the forecast looks pretty open here for the next 10 days or so, we should kind of get back into some normal movement of feeder cattle and also fed cattle across the country.
Good deal. Well, Casey, we appreciate you coming on and us just being able to talk through this market. Want to throw a few quick reminders out there. On our purebred side, we're having quite a few purebred sales through the spring here. Coming up, we have Durbin Creek. It's on February 4th. Paus Angus, which is on February 6th. Upstream, which is on February 7th. Fawcett, which is on February 10th. And then Top Hereford, which is on February 13th. If any of you purebred producers are out there listening, get with our LiveAg reps, and they have marketing packages for you as well to be listed on here. And if you're out there looking for a new platform to broadcast yourself, reach out to us. We sure would appreciate it. So, Casey, thanks for the market report. Once again, God bless, and we live it.